In this candid discussion, Warren Buffett addresses the current economic landscape, highlighting the challenges of rising costs and disrupted supply chains. He delves into the unexpected surge in inflation and its impact on businesses and consumers, providing insights into the dynamics of the economy.
Our costs are going up. Supply chains all screwed up. There's more inflation going on than people would have anticipated 6 months ago or thereabouts. We're seeing very substantial inflation. It's very interesting. We're raising prices. People are raising prices to us, and it's being accepted. Take home building. I mean, the costs are just up. Steel costs, just every day, they're going up. And wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. It's an economy, really, it's red hot. They can't stop people from buying things, and we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either, and we'll wait for 3 months or something to sort of, the backlog grows. It just kept going, and it keeps going, and it keeps going, and it keeps going, and it just won't stop. People have money in their pocket, and they pay higher prices, and our costs are going up. Supply chains all screwed up, for all kinds of people. So the money is being diverted from a little piece of the economy into the rest, and everybody's got more cash in their pocket. Meanwhile, it's a terrible situation for a percentage of the people. It is not a price-sensitive economy right now in the least, and I don't know exactly how when it shows up in different price indices, but there's quite a bit more inflation going on than people would have anticipated 6 months ago or thereabouts. The best protection for inflation is your own earning power. I mean, somebody that is a first-class surgeon or lawyer or teacher or salesperson or anything else, whether the currency is seashells or paper money or whatever, will do all right in terms of commanding the resources of other people. So your own earning power is the best hedge against inflation. The second best hedge is to own a wonderful business, not a metals business necessarily, not a raw material business, not a minerals business, but a wonderful business. And the truth is, if you own Coca-Cola, if you own Snickers bars, if you own Hershey bars, if you own anything that people are going to want it to give a portion of their current income to keep getting, and it has relatively low capital investment attached to it so that you don't have to keep plowing tremendous amounts of money in just to meet inflationary demands, that's the best investment you could probably have in an inflationary world. But
Warren Buffett highlights the significant challenges posed by rising costs and supply chain disruptions leading to unexpected inflation. He emphasizes the prevalence of increasing prices across various industries and the impact it has on businesses and consumers alike. Buffett suggests that the current economy is characterized by strong demand, but also acknowledges the negative consequences this situation has for a portion of the population. He emphasizes the importance of having strong earning power and being engaged in a resilient, low-capital investment business as effective strategies to mitigate the effects of inflation.
inflation is bad news for investors under almost any circumstances. You can argue that if you owned some business required very little capital investment and had real flexibility of price during an inflationary period so that people will continue to give up a half an hour of their own work every month to buy your product, and you leveraged it, then you might even beat inflation to some extent. You really want a business, and everybody wants a business, that doesn't take any capital to speak of and keeps growing and doesn't take more capital as it grows. Now, our utility business, our energy business requires more capital as it grows. Our railroad business, to some extent, requires more capital if it doesn't grow even. So capital-intensive businesses, by their nature, are not as good as something where people pay in advance and you don't need the capital. I mean, if you look at where the top market value is in a $30 trillion market, if you take the top 4 or 5 companies that account for, maybe 4 trillion or so of that 30 trillion, basically they don't take much capital. That's why they're worth a lot of money, because they make a lot of money and they don't require the money to any great extent in the business. We own some businesses like that, but it's certainly not the railroad and it's not the energy business. They're good businesses. We love them. If they didn't take any capital, they'd be unbelievable. They're good, but that's just what we've learned from 50 or 60 years of operating businesses, that if you can find a great business that doesn't require capital when it grows, you've really got something. It's interesting. In the United States, the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world, but actually it's worked out pretty well, so I have no complaints.
Yeah, most people are going to get a very small real return from investment after considering inflation and taxes. I think that's an iron law of the world. If for a brief period some of us do better than that, we ought to be very thankful. One of the great defenses to being worried about inflation is not having a lot of silly needs in your life. In other words, if you haven't created a lot of artificial demand to drown in consumer goods, why, you have a considerable defense against the vicissitudes of life.
Charlie, we're selling consumer goods in the other room.
Warren Buffett's insights provide a nuanced perspective on the current economic challenges, shedding light on the interconnected issues of inflation, supply chain disruptions, and consumer behavior. His advice on focusing on earning power and investing in businesses with enduring demand underscores the importance of adaptability and wise decision-making in the face of evolving economic conditions.